Hi, everybody, and welcome back to Friday Focus, our new program designed to highlight the key features of our SVA service. I am Ross Healy, the chairman of Strategic Analysis Corporation. This week, I'm going to showcase something that current capital markets theory suggests is unlikely, that the market has a memory and that valuation patterns can repeat over long periods of time. I first encountered this during our analysis of Coca-Cola. Since it went public in 1919, the stock has enjoyed 3 cycles, starting and ending at the same valuation levels, although the current cycle is not over yet. But that's no good for us, is it? A 40-year cycle is an almost useless piece of information. So today I'm going to look at 2 companies, one Canadian and one American, that have clear, shorter, regular, tradable periodicity. And I will talk about the NASDAQ 100 as well, which has one as well, as, by the way, does the Standard & Poor's 500. I should observe that the Canadian banks are spectacular examples of my thesis, but that's a story for another day. So let's start with Canadian Tire. And as you can see, this chart of Canadian Tire, the stock has tended to peak at that red line right, which is its mid-growth price, or 2.5 times book value, and it has tended to peak there with some degree of accuracy. But that's not all. The stock, as you can see here, 1, 2, 3, 4 times, has also tended to bottom at exactly the same price, at what we call its low mid price, or a 20% discount to book value. Well, let's take a look at another stock with long-term memory, and that is FedEx. And this chart here goes all the way back to 1984. And as you can see, when you look at that chart, look at the remarkable accuracy of this stock, peaking at its super growth price right here. That's 3.5 times its adjusted book value. And it's peaked there once, twice, 3 times, 4, 5, 6 times there. Now, it has tended to bottom at its book value, or just a little bit below that. That's this dark green line here, or what we call its normal price. Didn't do it the last time, but we're still waiting. Now, here's something really interesting. The last time that it got here, I looked at the insider trading report on the company, and I must say don't know whether I was surprised or whether I should have expected it, but there was huge insider selling at that point. It is if the company knew that that was it for the price, and it peaked there with dead precision. Well, that's not all, because we want to look at the indices. And one key index that I'm going to look at is the NASDAQ 100. The NASDAQ has tended to peak right at this line here, which is what we call its high bubble 1, or 9.5 times adjusted book value. And why this is very important is the index is almost back there again. And the question, therefore, is, are we going to have a nasty setback? Or, as people are hoping, is the index going to break out? Well, we're going to see, but knowledge of what that breakpoint is as you can see from the recent past, is very important from a trading point of view. Anyway, that's it for this week. I hope you have enjoyed our Market Has a Memory piece, and I'll see you next week.